units as well. So don't limit your view regarding the margin of safety. Margin of safety can be in terms of units and can be in terms of dollars as well. So formula for margin of safety is that total sales, your current sales minus break-even sales. That's it. So if we continue our RBC example, so how many units are they selling right now? They are selling 500 and their break-even is 400. 100 cycles they are selling, they are above the margin and they are safe how much? 100 bikes. 100 multiplied by the 500 market price, answer is 50,000. Let's see that. You see here, margin of safety, 200,000 minus 250,000. Answer is 50,000. So if we assume that RBC has actual sales to 50,000, given that we have already determined the break-even sales to be 200,000, the margin of safety would be 50,000. It's not about the margin of safety. It doesn't mean that the difference in profits. No, margin of safety is already, we talked about that, it's based on sales, right? How much above we are selling from our break-even. That's it. Any question, guys? And margin of safety can also be calculated in percentage. If you want to find out the percentage, margin of safety percentage means margin of safety in percentage is equal to your sales minus break-even sales divided by sales. Simple. The sales minus break-even sales, 50,000, 50,000 divided by 250,000. 20%. What this 20% says to you? That the RBC, how much is safe? Its margin of safety is just 20%. It is good or bad? Leo, Sipade, is it good or bad?
It's good.
Sipade, Crystal.
Yeah, it's good because it's above the break-even sales.
Oops, sorry. Here. Answer is we don't know, because ratio problem is that ratio is used for comparison. It won't tell you it is good or bad unless we compare. If the industry average is 80%, then you are doing bad. Plus margin of safety, greater the margin of safety, greater the company is in good position. But even then, is good or bad? We don't know. We need to compare. Percentages are always written to compare. You cannot just make the opinion just based on one ratio. You need to have others ratio as well to compare. Then you can say that the RBC is in good shape or not. Right? So if you want to find out margin of safety in units, we can also do that. Right? There are multiple ways to do that. You can find out the margin of safety, $50,000 divided by sale price. Answer is 100 bikes. Or you can find out the units sold, current units sold minus break-even units. Answer was also be 100 bikes. Concept is the same. You can derive any formula you like. Understand? The margin of safety can be in percentage, can be in units, can be in dollar sales, or can be in dollars, right? So if you understand all these concepts, please answer this question. 2,100 cups are being sold, right? So what is the margin of safety expressed in cups? You need to find out margin of safety in units form. Please calculate that. So first you have 2,100 cups. That is your current sales. You just need to find out break-even units. That is your margin of safety in units. We know that this is 2,100, and break-even units are, what is the formula for break-even unit sales? Fixed cost, which is 1,300. Let me just write it down here. Fixed cost divided by CM in units. That is break-even in units. What is the answer here? B, right? Everyone, any question?
Sir, can you repeat it again?
Okay. Here we go. Again, one more time. The rest of the question is the same. Sale price is 1.49. Variable cost 0.36. Fixed cost 1,300. They are selling 2,100 cups. So you need to find out margin of safety expressed in number of cups. So margin of safety is equal to, if it is in units, then your current sales unit, your current quantity minus break-even quantity is equal, that is your margin of safety. In terms of dollars, margin of safety, dollars, that would be your current sales, dollar sales, minus break-even in dollars, right? So we need to find out margin of safety in units. Currently you are selling 2,100 cups. All you need to find out the break-even units. What is the formula for break-even in units? Fixed cost plus zero target profit, right? If we use target profit formula as well, so we just need to put zero target profit and CM in units. Fixed cost is 1,300. CM is 1.49 minus 0.36. Sale price minus variable cost. So if you divide 1,300 with 1.13, you will get 1150. Right? So your current sales in units minus your break-even sales in units, answer is 950. So you are selling 950 cups above your break-even point. So your margin of safety is 950 cups. Understand? Or if you are using the slide formula, that would be a lengthy procedure, but that would be, we also solve this through that one. So find out the margin of safety in dollars. So use this formula. So your current sales are 2,100 multiplied by 1.49. Answer would be and your break-even sales. You need to find out. The break-even is equal to fixed cost divided by CM ratio. What is the CM ratio? CM ratio we calculated in our previous slides. It was 0.758. So 1300 is your fixed cost divided by 0.758. So we calculated it as 1715. Answer would be 1414. So that's the dollars. We need to find out in cups, right? So if you divide it by sales 1.49, you would find out the cups. So 1414. 949 something. So that would be B as well. Right? Now it's clear? Camille?
Yes, thank you.